If you're starting a business in New Zealand in 2026, this is going to be a complete guide to setting up the insurance. The first question that everybody asks is insurance legally required if I'm setting up a business in New Zealand? And the answer is no, it's not. But almost every single business still has insurance. Why? Well, because a lot can go wrong. A company vehicle could crash, a fire could burn down your premises, or a mistake in your work could cost someone hundreds of thousands of dollars. Yes, I've seen it all happen before. Insurance exists to stop one bad day from ending your business entirely. And while there are dozens of different policies you could buy, when you're just starting out, you need to focus your insurance on what actually matters to you and your business. I'm Ethan, the co-owner and CEO of Gerrards Insurance Brokers. I've spent years advising businesses all across New Zealand on their insurance. I also run my own business, so I know exactly what it feels like to set this insurance all up from scratch and to see that pesky insurance bill hit your account every month. This guide is how I'd explain setting up insurance to a mate or myself back when I was getting started on setting up insurance for my own business. So how do you actually get insurance? In New Zealand, you've got two options. Option one, you can buy insurance directly from an insurer online or over the phone. Option two, you can use a broker like us to buy your insurance. Now, here's the real difference. When you buy direct, you're on your own. You choose the policies, you answer the questions. If you get something wrong, well, that usually shows up when you try to claim. Now, there's nothing wrong with this, but a direct insurer just can't advise you on what you shouldn't or should buy, whereas a broker can. Brokers help you decide what you actually need and avoid buying stuff you don't. And they structure the cover properly. They also help you when a claim happens and advocate on your behalf. Now, for commercial insurance, brokers often end up cheaper overall and save businesses from some very costly mistakes, both in setting up their insurance and when it comes to claims time. However, for something simple like a house insurance policy, buying it directly online can actually be the right call because it's pretty straightforward and it's actually a little bit cheaper. So, house and contents, do it yourself. Business stuff, get a broker involved. How much does it actually cost to buy business insurance? Well, that entirely depends on what you do. But at the low end, an office-based business with no assets and no vehicles might pay around $400 a year. However, at the higher end, a business with vehicles, tools, site work, well, you could be looking at $3,000 or more. However, when you're starting out, the goal isn't perfectly covering off every single risk. The goal is to ensure the things that can wipe you out completely. So that brings us into the covers. What's the most common one? Well, that's public liability insurance. This is the most common cover businesses in New Zealand have, and they almost all have it. For example, you could run a cafe and a customer trips and they don't get injured, but they smash their $4,000 MacBook. Now, in New Zealand, you can't be sued for personal injury. Generally, ACC covers that, but you are responsible to damage for other people's property. Public liability insurance covers damage to this third-party property and certain injury claims and legal defense costs. And most small businesses choose $2 million of cover. However, some contracts, especially with large corporate organizations, can require higher limits, maybe 5 million, 10 million, sometimes 20 million or more. Now, one massive trap to be aware of when you're buying public liability policies is that some of them actually exclude damage to property you are actively working on. So, for example, you could be cleaning a big glass window and you scratch it with your cloth because you got something on there. Now, you're liable for this, but most policies in New Zealand actually exclude cover because you're actively working on it. However, this is something that can be added in, and some insurance companies have it by default in their public liability policies. Now, this is especially critical for trades businesses because pretty much everything you do is working on property in some form. So without it, you've almost got no insurance cover. So it pays to be especially vigilant. The next is commercial motor vehicle insurance. If you use a vehicle for business, it should be insured commercially. Even occasional business use can invalidate a private policy. Commercial insurance, some people might think, oh, that's going to be so expensive, but that's not the case. It's actually usually similar in price. Sometimes slightly more, sometimes quite a lot more, but if you're just using it for general office work, it can actually be the same in a lot of scenarios. Now, the policies are often also more flexible with fewer driving restrictions, fewer storage conditions. It also still covers you for all your private use anyway, so if you're unsure, just insure it commercially. Remember, commercial covers both, private only covers private. The next is material damage insurance. So this is just a fancy name for your asset cover. It covers your things like your buildings, your contents, your tools, your stock, from all the things like fire, flood, earthquake, burglary. Pretty much think house and contents, but for your business. If you've got assets you can't afford to replace, well, this is worth looking at. But if all you own is a $2,000 laptop, well, you can probably survive without this insurance early on because there's minimum premiums for every cover, which means the insurance company will charge a minimum amount for even going on risk. Now, this is an area where new businesses often overspend, so be careful with this one. Moving on to statutory liability insurance. Statutory liability covers unintentional breaches of New Zealand law. For example, you hire your first employee, they're lifting something heavy and injure their back. Now, ACC sure is going to cover the injury, but WorkSafe could still investigate you. And if you've seen on the news, these investigations get really expensive. So statutory liability cover can cover the legal defense costs and some fines. Now, it doesn't cover fines under the Health and Safety at Work Act because they actually made paying these illegal in New Zealand through insurance. But it'll still cover all those legal costs that can run to tens to hundreds of thousands of dollars. Now, cover is usually $500,000 to $2 million and costs around $100 to $400 per year. So for most businesses, this is a no-brainer because if you do end up breaching New Zealand law, it gets expensive really quickly. And moving on to employer's liability. This is where a lot of people get confused. Employer's liability sounds important in New Zealand, and most businesses have it, but they don't realize that it's almost entirely useless. It only covers injury to employees where ACC does not apply, and ACC applies to almost everything, with a few exceptions. Now, to put this into perspective, one major NZ insurer has had one claim across thousands of employers' liability policies over the last 10 years. Now, the decision if you want this or not is totally up to you, but it's not something that I'd be prioritizing for my own business. What is actually important is employment disputes insurance, which is what most people actually think this is. Now, it's actually a completely separate cover, just a similar sounding name. And this one covers legal disputes with employees for things like unjustified dismissals, personal grievances, disciplinary disputes. A personal grievance is where an employee claims they've been treated unfairly under New Zealand employment law. For example, a Rawson cabinet dismisses an employee, the employee raises a personal grievance for unjustified dismissal. Now, whether the employee is right or wrong, the employer still needs to defend themselves. And the average employment dispute claim in New Zealand now costs around $30,000. This is the cover businesses with staff should actually be prioritizing. And don't get confused between the two. The employer's liability is the injury one, employment disputes is the one that covers the personal grievances. Now, professional indemnity insurance is a cover you've probably heard of. If you give advice or you do design work, this one matters big time. For example, an engineer could be designing a building and they do something wrong and it has to be fixed. Doesn't meet the council requirements. Fixing it's going to cost hundreds of thousands of dollars. Who pays? The engineer made the mistake, they're the ones liable for it. Professional indemnity insurance is the one that's going to step in to help because it covers errors or omissions in your work and the financial loss to clients as a result of this. Now, cover can range anywhere from $250,000 to $10 million or more, and the cost depends heavily on the risk. If you're in a low-risk profession, it might start around $400 a year, but high-risk professions can be far more. Think like structural engineers or people certifying like fuel tanks. Well, this is going to be a lot higher. Now, other insurances you might need depending on your business could be things like cyber insurance, marine cargo, that's just another fancy name for shipping insurance. So if you're bringing goods from one place to another or shipping them around the country, management liability, business interruption, which can cover your costs if you say your warehouse burns down and your business suffers as a result. But not everybody needs these on day one, and most businesses add these later on as they grow. Now, the biggest mistake new businesses often make is actually assuming that all insurance policies are the same. They aren't. Two policies with exactly the same name can have a completely different cover or completely different wording where it matters for you. Now, I've seen a $20,000 engine destroyed and not covered because of one exclusion. So one policy stated the part that they were working on was covered, and another policy stated that the part they were working on was not, but everything else was. When that's an engine, well, just the part alone can be pretty expensive. This is why a broker is quite important. Now, when should you actually start working on this? Ideally, you want to talk to an insurance broker 2 to 4 weeks before you launch your business. Now, the advice they give you is free, there's no obligation, and usually they'll walk you through a recommendation with all the different covers you need or might be applicable to you. Now, the worst case of engaging a broker is that you're more informed and you can go online and get the insurance yourself. Now, in business, more knowledge is always better. So you can talk to our team. We're available 7 days a week, including on evenings on 0800 374 691. And we usually have our recommendation to you within a couple of days. It's all pretty seamless. So best of luck with your business out there. Business insurance can be a humongously complex topic, but if you get the right help, it doesn't need to be. And when you're first starting out, the goal is to keep it simple and just cover the things that could ruin your business, not necessarily everything else, end up overpaying and spending way too much. Because cash flow's tight and you need to invest that money so you grow and you become a great business.